and welcome to another accounting video. In this one, we're going to talk about cash budgets. It's really important that a company has control of cash, even in terms of what they do in the future with cash. For most companies, some cash flows, the inflows and outflows are fairly predictable, and they should plan for those and make contingencies for the unexpected. So let's take a look at a very simple example of a 2-month cash budget. So we have a company, Wrigley Company, that expects to have a cash balance of $46,000 on Jan 1st, 2022. They have relevant data for the first 2 months of 2022, 6 pieces of information, and they've asked us to prepare the budget for the month of January and February. So I'm going to start out by setting up my cash budget. It's an internal document, there's no prescribed format, and you want to keep it such that it's useful for the internal users and it's easy to update. So to start with, in the first line, I'm going to write the name of the company. In the second line, I'm going to identify the name of the document. This is a cash budget for 2 months. And I'm going to identify which months they are, Jan and Feb. And in the next line, I have the header for these 2 columns for the months of January and February. And I have 2 columns, an inside column and an outside column. So in the inside column, I'll have details. In the outside column, I'll have the totals, the subtotals that I'm going to place over here. So to start with, you always start with beginning balances. So the cash beginning balance, I was told, is $46,000. So I'm going to put that number over here in the outside column for the month of January. Let's read through the information given. The first one they say is they expect collections from customers of $71,000 and $146,000 in the first 2 months. So whether these collections are cash transactions in the current month, the cash sales in the current month, or accounts receivable from the previous month, we don't know. But what I know is this is how much cash I'll collect from the customers. So I start out with receipts, and under receipts, I'm going to have from customers, the amount is $71,000 and $146,000. I'm putting those numbers in the inside column. Okay, and I'm going to leave some space and then write disbursements. The second piece of information given is payments to suppliers is $40,000 and $75,000 in the first 2 months. So disbursements to suppliers, I have $40,000 and $75,000. I'm putting these numbers in parentheses. It's not necessary, but I just like to do that so that when I do my calculations and when I'm looking at it visually, it's easier for me to identify that these are going to be subtractions. For wages, I'm going to pay $30,000 and $40,000 in the 2 months. They're told wages are paid in the month they are incurred. So these are all current. So payments to cash disbursements to employees is going to be $30,000 and $40,000. Number 4, administrative expenses are going to be $21,000 and $24,000. These costs include depreciation of $1,000 per month. All other costs are paid as incurred. So they're saying of this $21,000 in administrative expenses, we have $1,000 depreciation, which is a non-cash expense. So that's not going to affect my the cash flows. So for other administrative expenses, it's $20,000 for January, not 21, 20, and it's going to be 23 for the month of Feb. I have selling expenses. In Jan, it's $15,000. In Feb, it's $20,000. These costs are exclusive of depreciation. They're all paid as incurred. So they're saying, don't worry about depreciation not included over here. So here I'm going to write for selling expenses. My numbers are $15,000 and $20,000. The last piece of information I'm told is sale of short-term investments in January are expected to be $12,000. I'm going to get $12,000 in cash when I sell my short-term investments. So that's under receipts, cash receipts. I'm going to receive that much money. It's going to be $12,000. Is there anything for the month of Feb? There's nothing for the month of Feb. So either I can write 0, I don't have to write anything over here. I prefer writing 0 just to know, make sure that I have looked at that information. And then the very last piece of information given is the company wants to maintain a minimum monthly balance of $20,000, and they can borrow up to $25,000 from the bank. They have a revolving line of credit and they can borrow. So the ending balance for each month has to be $20,000. That's what their desired ending balance is. Okay. So to get to that ending balance, let's see what we need to do. Now I have 46,000 to start with. I think in January, I'm going to collect a total of, this is total cash receipts are going to be 83,000, that's 71 and 12. And that's it. That means I have a total of 129,000 available for my disbursements, for my payments. Okay, the beginning cash balance plus the total receipts, that's going to be available. Now, how much do I expect to pay out? My total cash disbursements, I expect to pay out a total of $105,000. That leaves me with an ending balance of 24,000. Now, if you recall here, I'd said that I want to maintain a balance of 20,000. I'm at 24,000, so I'm good over here. But what I'm going to do over here is I'm going to write add bank loan if I need one, okay? Before I arrive at the final ending balance. Now, in this case, do I need a bank loan? The answer is no. Now, if I want to just extend this out to the future and have this as an automatic decision when you do your what if analysis of changing things, what I can do over here is I can say my ending balance, in this case, it's 24,000 over here. But here I can set up a formula and I can say, I'm doing it by way of a formula, and if then. I say if cell J42, that's this cell over here, if this number is greater than $20,000, then just place a 0 over there. If not, then I want 20,000 minus J42. I say I want a loan that will make this balance the desired number. Okay, so in this case, it's going to be 0. I don't need a bank loan. Now, whatever is ending balance over here is your beginning balance for the next month. So I now know in Feb, I'm going to start out with 24,000. I have total cash receipts of 146,000, leaving me with $170,000 available to make payments. That's a whole lot more than I had in the month of January. But let's look at our total cash disbursements. What's that number? That's 158,000. That has also gone up. So what does that leave me with? That leaves me with $12,000. Okay, so at this point of time, I have $12,000 over here. So I need money. Now, I've just copied the formula over here, and that says I need to borrow $8,000 in order to arrive at this $20,000 over here. I need a minimum of 20,000, so the formula is telling me that I'm short of cash, so I need to get at least $20,000 to be where I need to be. So I need to borrow $8,000, the bank loan. So basically, what's the benefit of preparing this cash budget? I'm projecting 2 months out what my situation is going to be. And basically what I'm seeing over here is at the end of Feb, I'll need a loan, an $8,000 loan. I need to position myself so that I can actually get that loan at a favorable interest rate and nothing rocks my cart, because I could be in a lot of trouble if I don't have that minimum balance. The minimum balance may be required by creditors. It could be for a variety of reasons. I want to maintain that minimum $20,000 balance. Once again, preparing a cash budget is a really good internal control feature because it helps you plan for the future. It tells you how much you need to collect from your customers. It gives you an idea as to whether you can give out, be more generous with your credit terms or be less generous. There are a variety of things that you can plan for the future if you set up your cash budget and revise it as time goes by. So once again, this was an exercise in which we prepared a cash budget for 2 months. Companies will do this 2-month basis, 3-month basis. Some of them prepare weekly cash budgets. It's generally a very good idea because it reminds you that cash is king. If you don't have cash, you're not going to be in business for too long. If you want to borrow cash, you need to plan for it. It just doesn't happen. So with this, I'm ending this video. Make sure you watch the next video in which I'm going to talk about more internal control features that a company should practice.